Welcome back to the program. On the expert panel tonight is Michael Heffernan from Austock and Roger Montgomery from rogermontgomery.com. Richard on the line from Sydney. Hi Richard, how can we help you?
Evening Chris, Michael and Roger. I'm directing this query to Roger.
Yep.
Because I'm now a lot wealthier Matrix investor.
Yep.
And I was just wondering, how does he apply his valuation now that the 40% owner of Matrix, Aaron, I believe, has sold 350,000 shares to make the market more liquid?
Yeah. And start with your Matrix.
Yeah, okay. So it's Richard, isn't it? Or is it Mark?
Yeah, no, it's Richard. Yeah, Richard. Yep.
So Richard, in relation to your first question, there is a belief that when managers or owners sell their shares, it's the top, and the share price will only go down thereafter. There's plenty of examples you could cite where that's been the case. But I bought shares in a company many years ago called the Reject Shop. Just after its float, and I remember I was buying stock from the founders and they were selling shares to me at $2.40.
To boost liquidity, probably, was it?
Well, look, quite frankly, the value of a business doesn't change. You know, the value of a business isn't going to change when a founder sells shares. It doesn't matter who's buying or selling shares, the value of the business doesn't actually isn't affected at all. What's interesting about this particular business is that we've got to understand that its prospects are very bright. The oil price, I believe, is going to continue to rise. I believe that their unit volume could actually double, potentially. There are, of course, there are risks to that not actually happening. But just because Aaron Begley sells some shares doesn't mean he's got some insight into the share price that you or I don't have. Of course, it could be that he does, but it doesn't necessarily mean that. So I'm not particularly concerned. I still own Matrix Composite and Engineering shares. I'm going to wait for the full year results to come out, and I'll be very interested to see what those results look like and what statements Aaron makes about the prospects of the business. But we can't begrudge a vendor of a business who's invested their entire life in growing that business, taking some money off the table and diversifying a little bit. I don't begrudge them that, and so it's an important thing to remember. We've got to look at the performance of this business. I've been in many situations where founders have sold shares to me, and I've bought them, and the share price has gone up 30, 40, 50%, 100%. Just as many as where the director of the company has sold and the share price has gone down. So it's not a signal in itself.
Thanks for that, Roger. I think it's a good summary. I'm going to try to sneak another email in, and we've got one from Wayne, and he says he's a recent buyer of Tiger Resources shares. They're about to start producing next week. I'm hoping for a jump in the share price with this news. Would you sell or would you hold for the end of year numbers that will show dollars coming into the bank, long term or short term, now that they are producing? No, is that on your radar at all?
There's a lot of money to be made in resources when a company goes from being an explorer to a producer, and simply because an exploration license is a very different thing to a mining license. To go into production where you're actually making money, but to say that they're going to start producing in 1 week, is there going to be an uplift as they start to produce? My experience says no. It's usually 3 months or 6 months or even 9 months before that you get that big uplift. And if you look at the share price, that's precisely the case. So you've seen the share price has more than doubled in that time, probably in anticipation of it going into production. You have to value it on its merits once it produces. The value of an exploration business, or to value an exploration business, it's very simplistic, by the way, and lots of people say this, and I think it's wrong. A lot of people say, well, the value of an exploration business is zero because they're not producing anything. That's not quite right. It's actually the value of an exploration business is based on the resource that it has and the probability of it actually getting that out of the ground. And the difficulty with valuing them is just that. What is the probability of them getting it out of the ground? What is the probability of them being right with their assays and all that sort of thing? There is some value there. It's just much harder to find. Once they go into production, much easier to value. So let's see.
Yeah.
Let's have a look.
I think it's fair enough. We'll go straight to Helen from Malabar. Hi, Helen. How can we help you?
Oh, hi. How are you?
Very well.
Actually, I'm ringing about one of your stocks. I've had it on my watch list since you mentioned it on the show, and it's just been it's been absolutely bolting. And I was tempted to buy it today, but it shot up yesterday, something like I think 10 cents or 15 cents since yesterday. So I was just wanting to know, would it be good to buy still at these levels? Like it closed on 64.5 today.
Small gold stocks, Roger, and
we do own one. I can't mention it because we're still accumulating it.
Right.
So I don't want to increase the level of competition.
Yes.
So we take out making money for clients very seriously. So
but
I'm not going to give.
Or are you valuing it on going into production?
No, it's already producing.
It's already producing.
Right,
okay. Yep.
I'd be interested in Michael's comments. Michael, you've seen a few cycles before. You get a sense. I sometimes get a sense that there's a lot of there's a lot of mining exploration companies floating right now. Not only those, but mining services companies. Have hit the boards, and a lot of them, and there's more to come. You sort of wonder, does it smell like it's getting a little bit
toppy?
It's a little bit excitable at the moment. I don't know, Michael. You've got more experience than me.
Yes, I can recall the Poseidon boom of 1970, as I was mentioning a little earlier on.
I was swapping I was taking the dummy out at that point and putting the paper in front of me.
And then anything that even smelt of something under the ground saw its price shoot up, even though nothing was ever going to happen. And then we had the internet bubble and burst back in 2000. The hype is there, and it seems like it's creeping in a bit now too, with resources and gold and copper stocks, for example. Just got to be very, very careful. Check out the companies, see whether they've got the cash to keep going on. Have a look, as Roger said, at what its resource is, and see what the management of the show are. Look at all those issues before you really put your money in, because otherwise you're really taking a bit of a punt. And if the thing does go up a lot, as I've mentioned several times already on this show, think about taking a bit of profit, unless all the indicia of the goodness of the company are still on hold, and then you can pursue it. But otherwise, be very, very cautious. And to use the expression that Roger said, it just smells a little bit like the Poseidon and the internet bubble and burst.
Would you be offended if I plugged my book? Only because only in my book I actually go through an example of a mining exploration company, and I show how to calculate something called cash burn, and it shows how many months, basically how many months left till they run out of cash. And it's a really simple calculation, but it's really helpful for all of these mining exploration companies. All you need is one annual report or their quarterly update, and you can have a look and you can calculate this ratio, and it'll help sift the wheat from the chaff.
Excellent. I think that's pretty good commentary. Okay, we'll go straight to our next call. I've got Timothy waiting on the line from Burwood. Hi, Timothy. How can we help you?
G'day. Thanks for taking the call.
No problem.
I'm just referring to Linus, which I suppose everyone knows is in the top 100. I'm just wondering whether the boys there think it's a buy, sell or hold.
If analysts' predictions for its earnings are right, if they are, and your guess is as good as mine, if they're right, then it's I'm not joking, it's worth $4 in 2013.
And I think that's
and it could actually go there. Do I think long term, when you sit back, I remember I used to give talks for the Australian Stock Exchange up at Brisbane at the old exchange, and they still had the chalkboard, with the old prices on there. It was interesting to look at that, because 15 years after the boards were closed down, you could see what stocks were still around and what ones weren't. And the vast majority didn't exist anymore. They weren't there anymore. Is Linus a BHP? Is it going to be around in 30 years or 40 years? Most people don't even care about that long-term time frame, but I do.
Yes.
And I just don't think that that we're going to see this stock continue to go up in a straight line forever. It'll be rocky. If the analyst targets are met, it could get to $4. But if they're not, and it only takes, by the way, 10 to 15 years for a rare earths mine to come on. The United States has got itself into a pickle because they shut it all down, but they could bring it back on. It would only take 10 years or so. Now, most people are listening to me talk about 10 years and they think, who cares? I'm just hoping to make, I'm hoping for it to go to $2 to $4 in the next 12 months. That's what I want to know. So, okay, let's bring it back to short term. If analyst predictions for its earnings can be met, it's a $4 valuation in 2013.
Look, that's all we've got time for today. So thanks very much to our guests, Michael Heffernan and Roger Montgomery. And of course, thank you to you, all of our viewers, for all your calls and your emails. Until next Wednesday, I'm Chris Kimber.